I had a funny conversation the other day. These kind of things always happen to me, and I always happen to be, I like to think, in the right place at the right time. I was talking to my gardener, and as he came up, he's like, "Oh, your lawn looks great," and blah blah blah. Yeah, we'll trim the tree and over there and all this. And he goes, "I just want to let you know, I am starting a gutter cleaning business. Okay. And, we're going to clean gutters and, we can start with yours and all of that. And we'll come back and check on it and everything. Cause the guy's a great guy and he works hard and he hires people that work hard. And so I said, that's great. I said, well, how how are you setting that up? He goes, oh, we're not doing anything. We're going to get a couple guys and they get the ladder and go up there and, they'll handle it. Okay. Danger. It's like, for those of you old enough who are watching this or who saw the show Lost in Space, when the robot goes, danger, Will Robinson. So this one was like, danger George, right? And this is the problem that people have when they're starting their business and trying to figure out what they need to do, okay, or what entity structure they should have. Now, many people may not know the answer to what entity structure that those gutter cleaners should have, right? And what are some of the other requirements? Well, really, it's really kind of scary if you think about it, right? Because if you have very high roof and you see the size of those ladders and the guys going up there, if someone falls off of that mess, then you're screwed. Because the way this works is the attorneys sue everybody to try to get recovery of some kind of monetary settlement on behalf of the gentleman who had hurt himself or herself on at a particular job site. So it's like, it's not just having the right entity, but you have to ask these questions. Are the people who are working at your house or any other property, do they have insurance? Are the people who are doing the work eligible to work in the United States? If not, do they have an ITIN? Why does all of this matter? Because it's a huge liability for you. It's also a huge tax issue for the owner of that company. Okay. And this is why it's important. If you're trying to start a business, don't do it yourself. You can't do it yourself properly, or you make a mistake that negates the protection you have from liability issues related to an accident, a fall, or something other bad thing that could happen on your property, and then you get sued. So let's take a look at what you can do from an entity perspective. Okay. Remember, again, we're going to go back to the first thing I said. One is stop doing it yourself. Get someone to help you choose what entity you should be in. Of course, if you're just doing something yourself, you're a sole proprietor. It makes no sense for anyone in these litigious times to be a sole proprietor. What you should do is, at a minimal level of liability protection, establish an LLC in the state in which you live. Now, many people will say, oh, well, I need to establish one in the state of Nevada because Nevada doesn't have taxes. Okay, well, guess what? You can establish in Nevada, but suppose you live in the state of Maryland. If you live in the state of Maryland and do business in the state of Maryland and make money directly paid to you in the state of Maryland, you need to file Maryland taxes that take into account that LLC. So it's where you're doing the work and where you're earning the money, not necessarily where you have that LLC established. LLC gives you that lowest level, again, the lowest level of liability protection that you can get from an entity. Okay. Now, then there's other entities that you want to look at that offer some significant tax challenges. They're actually pretty good tax challenges. One is the S-Corp, or if you're an LLC, you can elect to be taxed as an S-Corp. Why is that important from a tax perspective? Because if you elect to be taxed as an S-Corp, then you are exempt from, say, self-employment tax. However, there is another requirement that in addition to being exempt from self-employment tax, you also have to pay the owner of the business reasonable salary. Okay. Now, if anyone can tell me what a reasonable salary is, I'll send them a check. Nobody really knows, but we all know that reasonable salary is not $10 for the whole year. Okay. It's a little bit more than that. That's all I can say. I think sometimes, sometimes I've heard people talk about, oh, they're going to pay 25% of revenues or something like that. The exemption from paying the self-employment tax is significant for that type of entity. And those are the main entities that we work with our clients. Um, let's see, the horror story of the week is you have a client who's making over $1 million a year in revenue and clears a very nice profit in the $400,000 range. Well, guess what? They're going to pay self-employment tax on that net income up to the maximum, which is for Social Security, $147,000 a year. And for Medicare, it's the 2.9% on everything. So that's a significant amount of money. And if you do this properly, you can actually save yourself a lot of money. I've spoken previously about tax planning. This is also a major tax planning issue for everybody because you're talking about real money that you don't have to pay either the feds or the state. So you really need to jump on this. And before you make a decision, not only talk with maybe somebody about what entity to choose, but talk with a tax professional about what is the best entity choice to make and what is the dollar cap where you want to protect yourself from Social Security self-employment tax. Now, you've also got compliance issues for any of these entities. In the state of Maryland, you have this horrible thing called the personal property tax return that needs to be filed each year. And with that personal property tax return comes a tax from one of the Maryland counties that then you have to pay. So that's an additional tax plus the $300 or $350 fee that you have to pay for filing. That's very important because you want to stay in good standing with the state. You also don't want to slip into not good standing status. If something goes wrong and you're not in good standing, does that mean that your LLC will not protect you while you're not in that good standing period? You have to ask that question of your tax professional. Okay. Also, compliance related activities for S-Corp electing to be taxed LLC elected to be taxed as an S-Corp is also significant because the tax return required is much more complex and much more time consuming and much more prone to error. Once again, this is something that you cannot do yourself. I do not recommend that you do this yourself. Some people will say, well, I'll do it the first year and then I'll figure it out, on my own with one of the popular online tax preparation companies. Big mistake. Don't do it. At the end of the day, you're just really going to regret it. I have not really spoken about true S Corps or C Corps because most people really don't need those. And they're also much more complex. And guess what? Your bill is going to be higher when you're doing your filing for federal and state taxes. So you probably just want to not really worry about that unless you have a specific reason for it. So I spoke my poor gardener. I invited him to come sit on the patio or have a Coke, and we had a chat. And he looked at me like, he was going to turn himself inside out because of everything that I was telling him that he had to do. At the same time, he was most appreciative of that. And it just shows that people don't know. And people think they can do it themselves, but they don't know. So what I'm telling you out there is be careful, call your professional. Call your tax professional. Hell, you can call me if you have a question. We'll be glad to help you.